All right, so we should be live. I'm pretty happy today to receive Emmanuel Elkouby and David Perez from Peel Capital. Uh, Obviously, it's a period of crisis where everything moves fast, and I invited these guys who are doing actually private lending and mortgage as well. Uh, to give us an idea of what's going on the market right now. If you're in the middle of a transaction, if you're actually going to buy something, what's the options available for you, and basically what's the state of the union regarding mortgage loans on the market right now. So David, do you want to start on maybe the state of the union right now as a mortgage broker perspective?
Yeah, sure. Hi, everybody. Do you hear me?
Yes, we hear you.
Good. So, as you may know, we are in the crisis period. So everything is mixed up. So even with the bank right now, there is new rule that they just put in place. So if you're willing for refinancing, banks requires appraisal to be done on refinancing. But now with what's happening, they try to do as much as possible as virtual confirmation of the value with some system like Emily, or if the appraisal is going to come, they're going to go just drive by, so they're not going to come inside the house. So what that it means for the market value is that they won't be as accurate as possible. And obviously, banks don't know where the market is going to go, so they want to stay as low risk as possible. So that's what's happening with banks right now. Actually, personally, I have a lot of clients now that they are looking. We are starting refinancing their property for two reasons. First of all, the rates are very low, and second thing, they're gonna have access to the highest market value of their property as of today. In 2, 3, 4, 5, 6 months, we don't know what it's going to be. So they want to protect themselves and have access to that equity. So that's what's happening. And so a lot of refinancing on the market to get best rate and most of the value of the property.
Before we switch to Emmanuel, David, is there any banks that are still lending money right now? So you're talking about refinancing. Is there
Banks are still on business for sure. It's a little bit slower because of all the procedures, but they're still working. And actually, service is not as bad as we can think, because unluckily last week our system had like 4 days down, so banks has no more new mortgages from mortgage broker side, so they kind of reduce that delays that they're used to have to treat all the files. So now they're back on business, and yes, for sure they're going to be a little bit slower, but they're still on business.
Emmanuel, State of the Union.
How are you, Jean-Philippe?
Good, and you?
Good. Thank you for having us here today. I just want to start with a disclaimer. If you hear weird noises and screaming, I'm not in an insane asylum. I'm just in my house. Okay, so I have 3 little children, and one of them might pop up as we speak. Okay? So I'm trying to confine them in a room, but who knows? Yeah, the state, I mean, we've never been in a situation like this. So, and as David mentioned, there's like news popping up daily, very frequently. It's because there's no plan in place. There's no plan in place from banks. There's no plan in place from the government. Everybody's ad-libbing as we go and trying to, pepper us with good news and help us. But, things are slow because it's the first time and there's a flood. Everybody's worried and wants to protect their family, and the best way they know how, and they're following guidelines that we give that are coming out, but it's slow. It's slow for sure. So in terms of lending, like David said, banks are open for business. Nothing has changed on that end. However, it depends on which channel you're going to go try to get your financing, right? So if you're used to going into your branch to get, branch is closed. If you're used to seeing a démarcheur, you know, it's kind of like us. You have to do it virtually, and as long as you can work without meeting the person, it'll be helpful. It's difficult for maybe people that are not accustomed with this way of working. Could it be elderly, or even people like me? I'm born in the 70s, you know, so even technology is not always easy for everyone, right? So it's just a question of getting accustomed to it, and then following the best advice you can from your professionals, and mortgage brokers are at the top of that food chain for sure.
Because if I believe it's the banks, they are actually working remotely, like people from bank employees
so
are working.
Exactly, good point. So for example, all these mortgage underwriting centers, right, that were downtown or in Toronto, everybody's moved to their homes. So you have a reduced staff that can actually work, and they have limited resources in their homes. So that makes things just go. That first week was crazy, you know, like the end of February, early March. That was the peak of uncertainty. But slowly it's resolving. It really depends on the lender. Okay, so it depends on the lender, and it depends on how they can adapt to situation. You know, so yes, the government came with, you know, that news where you can defer your payments up to 6 months and whatnot, and then they got a flood, right? So if you look at, I'm gonna take two examples. I'll take my example. I'm with TD. I love TD, right? But I tried to call TD like 4 or 5 times. I go on hold for 30 minutes and I get flushed. I call, and the call's important too, but I get flushed, right? So I can't really get, and if I go online, they don't have a system that is put in place for that. On the opposite side, there's MCAP. It's a virtual lender where people can just log in, and then they have a drop down menu, and they can just say, okay, because of the virus or because I'm unemployed or whatever, there's a section there where you could defer your payments. So it takes 3 clicks and boom, your payments deferred. You know, so
Online
on your site, because when obviously virtual lenders don't have
offices,
branches, right? So since the beginning, they're set up to work in that manner, right? Could be First National, MCAP. I'm taking MCAP for example because I have a client who told me that. So
any difference, Emmanuel, between, because we're talking like lenders are open, any difference between small plexes, 4 units or less, or houses and 6 units and up? Any difference you see?
Not really. I mean, it's too early to tell. Okay, it's too early to tell on the appetite of the lender, whether he wants to stay away from rentals or he wants to because now everybody's at their house, right? So there's that uncertainty. April 1st, are they going to get their rent? Is the value going to get lower from that? So I think we need to pass April 1st, okay, and then see where we stand. Maybe 10, 15 of April, and then we'll have a gist of what we, in terms of the values, and if the appetite is still there for bank for those kind of deals. For me, I've had a few requests for refis on these type of properties. A couple of, when you're dealing with commercial, let's say, so above 4 doors, right? So 5, 6, 7, 8. You go into that commercial underwriting guideline for lenders. But if you fall between that under 2 million value, you're in a specific pool of commercial bankers that a lot of them aren't even taking your calls right now. They're not. Okay, they're just handling their clients as much as possible. So they get 30, 45-minute phone calls on existing clients, trying to see what they can do with their mortgages, can they delay it, what they can do, right? So they're swamped with that. So taking on new business, you really have to find that guy that's, you know, either brand new and starting off and is hungry, or get lucky.
Yeah.
Yeah.
Like, do you feel it's the same with smaller units?
No.
Smaller unit? No.
No, because smaller units, right? We fall into the residential underwriting. So anything that's 4 units and below goes to standard channel. So there's no delay.
There's all that. And do you think it's a good time to refinance a property to be liquid?
Listen, you know, so again, yes, we're worried, right? So we want to tighten the belt. So if you feel that you can restretch your mortgage, right, to 30 years and get a smaller payment, if that helps, do it. You know, you can always adjust your capital payment along the way, right? So if you want to create some cash flow and stretch it, do it, for sure, for sure. Rates, I mean, rates took a nice little dip, but if you look at the curve of the rates, they took a crazy dip and then they went back up.
Yeah.
So right. So if you're that lucky guy who managed to get that 2.29, 2.34. Clue. I'm talking to you, the client that I got in that rate. So I mean, if you were lucky enough to get in, you know, at that rate, good for you. But I was explained by some underwriters that, you know, if the banks feel that there's going to be a liquidity problem, then and they lose money, then they're going to boost rates. They're going to boost rates to protect themselves. You know, so that's why now we kind of like. You see that V curve where the rate drops sharply, but they're back up, not to what they were, but close.
Yeah.
Yeah.
What and before we go back to David sharing his opinion on that, do you have any clue of what's the conventional rate right now and CMHC rate right now?
Yeah, I have the rate sheet here. Actually, what I'd like to as you know, like David and I we do a lot, right? We call each other the Swiss Army knives of financing, because we started off as mortgage brokers and we expanded our services to private lending and whatnot. But we work for a banner called Mortage Architects, okay? And they set up a nice site, especially for the virus. And on there you have a ton of stuff you can look at, whether it's government information, rates, phone numbers for banks, you know, and I'd be happy to share that link with you, and then you can share it with the public. And
Sure.
you know, so you can still get with virtuals that 234 on an insured rate, but they're almost the last ones there to do it. And I don't know if you're even going to be able to get it through, but mostly everybody's back up on insured around, I don't know, 274, 279. It's hovering around that, you know. And there's still that benchmark, right? The bank didn't change anything with that. You still have that 5%-ish benchmark that you have to qualify as a lender. It's not because the rates are down or there's fluctuation. You still have to qualify for your mortgage. So,
yeah.
Yeah.
And conventional
is roughly the same. It depends again on the lender. Is it you know, in the last 6-7 years, David and I noticed a lot of micro managing of rates. Okay, when we started off, it was a lot of 5-year plan, variable, and short term, 1 or 2 year, right? And your rates were guaranteed for 120 days, and that's it. But now banks, to differentiate themselves, they like to have specific situations where they can bank on a good rate, right? So if your closing is within 30 days, it depends on the loan amount, it depends if the client has money with you. So is it a rental? Is it owner occupied? So you have little differences, but it's important to people to understand that even if you see a rate online, it doesn't mean that it applies to your specific situation, you know? So the mortgage broker has to detail that. So I'd say conventional, again, you're floating between 259 maybe and almost 3%, right?
Yeah.
So it's still
For,
good.
for
It's still
yeah.
good. When the crisis dropped, we were just a little bit higher than 3, and now we're down. We're under 3, so it's still good.
We're talking about small plexes here.
Small plexes and homes and rental condos and
Yeah.
chalet, like rental chalets and all that stuff.
Okay.
Anything
David,
that's considered residential.
David, go ahead.
I was saying anything that is considered residential, that's what it's applied to.
Okay.
4 units and less.
Any other thing you want to add about the situation of refinancing, David, from Emmanuel?
I think we said it all. Like I said, if people are thinking of refinancing, it's a good time to restructure their payment since a lot of people are going to be laid off. So they can use that advantage right now and also get access to that liquidity because we're in a period where we don't know where we're going. So it's good to have access to cash flow. Even if you don't use it, just have a mortgage line of credit and use the maximum value as of today of your properties. Because who knows what's going to happen if the values goes down, your liquidity is going to go down too. So
That's true. Yeah, I think being liquid right now, it's a great advantage on the market because obviously there's going to be some good deals depending on what happens on April 1st. Definitely. Staying in the residential four doors or less, refinancing, is there calling for refinance? Maybe you're not at the end of the term of your lease. Is there any banks or is there any tricks that we can add a second rank on residential? Have you seen that? Any banks that accept to do second rank to refinance a little bit more? David?
yes, some banks, if you have the first mortgage with them, they're gonna accept to have a second mortgage behind themselves.
Okay. Without breaking the term.
Exactly, without breaking the term. But like here, if you don't breaking the term, that means you're gonna have like to add like a line of credit, mortgage line of credit, that they can do it. They can do it, put it a line of credit, second ranking behind themselves. They're never gonna go behind somebody else, but they can do it behind themselves.
Okay. Do you think it's something that the banks are gonna be open to these days?
Listen, now from what we heard is that it's business as usual. So we don't know if they're going to put new rules in place, but for now it's business as usual.
Okay, it continues. Back to Emmanuel. We've seen from the charter banks, they accepted like MCAP and like you said, they accepted to delay payments in capital and interest. What about CMHC insured loan? Sorry, Emmanuel.
I knew that one was coming. So, so yes. So again, CMHC is there to help. That's their official, language. When it comes to exactly what it is, we still have to wait till early April. Okay, we still have to wait for early April. So, and it's along the same lines as the big multi. I'm getting already feedback from the lenders that it's going to be case by case. Okay, it's not because there's a situation that it affects everybody. Okay, we want to help people that need help. I think that's the message, right? They don't want to just give handouts to millionaires, right? They want to give handouts to people that need it. So it's a case by case situation, and the best way to present your case when you actually get through is to be prepared, and to prepare yourself, you need to make sure you have a couple of things that I could think of, which is maybe your statements, your rental deposits for the last few months, and then look what happens in April. Is there a significant drop off or what? Did you have any communication with your tenants that are explaining that, listen, I'm unemployed now and I have no income source. and I'm waiting for the check from the. So you need to have communication. You know, you need to have written documentation that explains why you're asking for help. Okay, they're not just going to give it to you because. That's for sure. Okay, so be prepared. Be prepared for that. So proof from tenants and your situation as well, whether it's your deposits or if you can financially show that you're also unable to handle it, whether you lost your job or stuff of that nature, whether your income is lower or you're taking care of somebody that's sick, all that stuff. So as much information as you can give them, that you'll get the best chances to get it. And for those that don't need it, they should refrain from calling. That's the truth,
Yep, I totally agree on that. Yeah, because if everybody starts doing that, I mean, first it's going to be harder for people to get the line and get attention if they do need help. And we had this discussion yesterday with the French live as well. Is that if everybody's doing that, they're breaking the system. I mean, they're breaking the system, and impacts will stay long after that.
Sure.
Banks may be more aggressive on rates. The risk taking from the CMHC will be different. So that's a very important message, as you say here, is that if you do need it, ask for it. But if you don't need it, don't ask for it. Don't break the system. It's a community effort right now. That
at least not just yet, At least not just yet, because
yeah.
It would be highly suspicious for everybody to all of a sudden need help within the short amount of time that we've been, right? So let's let the ones that really need it, that are on the paycheck to paycheck, get through right now. And then in a couple of months, if it drags on 2, 3, 4, 5 months, all those people will have been taken care of already. And then they can pass the torch to, let's say, the others, right?
Yeah, that's true. Because I want to put the emphasis on this again. I've saw people starting making calculation of like putting this capital into a bank account with X percentage of money. Just don't do this. Just don't go there. Okay, for a few $100, you're gonna break the system.
Yeah.
And by the way, it's quiet on the questions. If you do have questions about private lenders, about refinancing, anything, these guys are here to answer. So feel free to ask some question. You do, as a Swiss knife of financing, you also do private lending loans. How's the industry right now?
David, me, who goes? You got to direct.
You got to direct. Yeah, you have Michael. So I can go if you want.
So go ahead, David. My bad.
So on the private loan side, our main concern let's talk first of all for our existing clients. For our existing clients, we already talk with our investors, and we're gonna help those that need help. So, for example, if we have some customer that's gonna have like a hard time to make their payment for the next month, not do this one of April, because most of them they are supposed to have it. But if they need it and they can prove us that they really need it, we already negotiate that with our investors, and they are okay to help them too. So that's our way of doing business and private lenders. That doesn't mean that all the private lenders are going to do that. Maybe some of them, they're going to try to use the situation to do things differently. I don't know. I can't speak for them. But for now, for us, for Peel Capital, our philosophy is we are here to help our client, like if it was our partners, to make a good deal for everybody. So if they need help and they really need it, we're gonna help them. So that's on our side for our existing client. Now for new business, for sure we are open for new business, but obviously we're not gonna take the same risk as we were used to. because we can't forecast on the future value, because most of our business, the most important was the exit strategy, and a lot of our clients are investors. So for them, it was like using Peel Capital as a short-term service to create value and put it back after. Now, because the problem is the future value that nobody can really assess what it's going to be, either on residential or on multi-unit properties. We don't know if CMHC is going to change rules, so we're going to be really careful on that. And we're probably going to ask more, how do you say that? More involvement from the client themselves.
Yeah, skin in the game.
Exactly. We're going to need more skin in the game. Like last week, we had like a client that not last week, 2 weeks ago, that were fine to finance him up to 100% of his project to buy a multi-unit properties and do and obviously increase the value. He called us back this week to see if the deal is still the same, and unfortunately the deal cannot be the same because the situation is not the same, but we can still do the deal if you want to put more skin in the game. That means he has like other properties, but we didn't take his primary residence as a collateral. But now to go forward with this kind of project, we have to take more guarantees. So that's the difference for us today for new businesses.
Okay, but there's still loan going up out there, still private loan going on. Okay,
for sure.
Okay, let me see if I have any question here. No, it's pretty quiet on the question side. Emmanuel?
I have a strong point.
Yeah, go ahead.
I don't know if I'm getting this question a lot is, I don't want to go to the notary anymore. I'm scared. I'm getting a lot of that, right? So I want to let people know that for LOASIC, okay, LOASIC, it's the body that regulates real estate agents, mortgage brokers, until the AMF takes over the brokers soon, the mortgage brokers. So for them, the virus right now, as of this morning, it's not considered force majeure, okay? It's important to know that because a lot of buyers want to refrain from going to the notary because they're worried whatever they're buying is going to be worth less. It's not a good deal. They need to hunker down. Life is different, right? But it's not considered force majeure so far. Okay, it doesn't mean it can change. Okay, but so far that's the OASIC response, and they're saying that the golden rule is for everybody to try and work things out right now. Okay, can you delay the Can you delay the closing? Can you maybe rearrange some terms in the deal? Whatever. So they want everybody to work things out as much as possible to keep deals live. Okay, and because then you're going to get a flood of people trying to sue other people. You're not coming to the notary. Agents are going to sue for their commissions, so just for the people to know that as of today, it's not a force majeure. It's not a reason for you not to go to the notary.
Very important point. And the notary is juggling in between closing and opening.
Like, the notary, he's mandated by all parties to make sure the transaction goes smooth, right? He can't really give his opinion. Like, unless, once he's mandated by everybody, he just has to close it along the terms that people gave him, so you have your offer to purchase, you have your condition, it's there, you have the instructions from the lender. So as long as those things work out, you need to move forward, but it's tricky. You have to feel for the people that are engaged with these transactions on both sides. Maybe one guy needed to sell to buy something else. Maybe one guy needed to, he's not thinking that the investment is worth so much anymore. I don't know. They have all these fears, right? So the government and the banks are trying to reduce fears by postponing those mortgages, by giving you help. So all these things are trying to temper the anxiety. So to say, let's continue and move forward, but day by day, things are changing, things are moving. So
That's totally true. Actually, we're doing Facebook Live, and the Facebook Live from 2 days ago are already outdated. 2 years, like 2 days is almost 2 years in
we
a
should do this
normal.
every week, Jean-Philippe. We should do this every week.
Yeah, I agree.
Next week, I might be without my shirt and jumping up and down and crying in my shower. I don't know. For now, I shaved and everything for you, so to look professional.
Well, thank you. So, Emmanuel, what do you think of, with your crystal ball, what do you think about the market on real estate?
Well, you're asking me a question like a politician.
Yeah.
And I'm gonna have to give you a Swiss answer like a politician, right? So
Would you buy? Would you buy today? Actually,
listen, it depends what and for what price, right? It depends. I would for sure look for opportunities. You know, like where do I see opportunities? I think is more something we could think of.
okay.
Let's say, like, nobody's gonna sell their house. Nobody's gonna sell their property dirt cheap right now. They don't have to. They need a place to live, right? So I think home values aren't really going to change in the short term. I think it's more a long-term thing, right? So the longer this drags on, the more you'll have people unemployed, the more you have less money, and then if you don't have help if the government help is not, sustaining, that's when you're going to get issues. So the problem is that because we don't know how long it's going to take and what effect it has, there's a saying in the stock market: you don't catch a falling knife. So what does that mean? You don't want to be the guy, getting into that deal that maybe later it's worse, right? Or that's the bear. You have the bull who's saying, well, I'm going to take advantage of this opportunity, and I think I can weather the storm. And those are the guys that are going to make big bucks, right?
Yeah.
So it depends on your risk tolerance. I honestly think that if your cash flow is strong, you can really bank on some good deals that might come up. Yeah, you can have over leveraged landlords that maybe they bought something, they optimized it, now they're like fully refinanced, and now in a sector of the city where it's maybe the rents are not so high, and you have half of those guys not paying you rent, and then they're not able to get through to their mortgage lenders, and if they're really cash strapped, you might have people that just want to unload some stuff. Okay, yeah. That's what you should look for. But I don't think it's right now. I really don't think it's right now. I think it's going to take a couple of months to get there.
But that's very wise. We had the discussion with Petrus saying it's a market for experienced investor right now, a little bit more because it's more risk taking. So that's in the same direction. To finish, David.
Yeah, I just want to add something regarding what might happen in the market. So yes, I'm pretty sure that in a couple of months, the longer it's going to drag on, more chance we're going to have opportunities in multi-unit properties, not on residential, because like we said, nobody's going to move right now because all of what's happening. But the most important, the market value under residential. If you look at the last crisis that we had in 2008, 2009, what happened at that point? The government put in place, they start lowering the rates just to have more liquidity in the market and get the price, and sustain the market value of the residential property. And if we look back what the government did the last 10 years, they start putting more rules and more restriction on the residential market. Why do you think? It's only to prevent this kind of situation when we are not where we are now. If the market looks people, the government and the country cannot afford to have a crash in the real estate market. They cannot afford it because it's a lot of jobs there. It's a lot of money involved. So what's going to happen? The government have tools to sustain the market value. They can decrease the rate, which they have done. But if it's not sufficient, if you remember 10 years ago, we were able to get mortgages up to 40 years amortization. We didn't have that 5% rate qualification. So I'm pretty sure that we might not have the same increase that we have the last few years, but I don't see a crash in the market value. They might stay at least at the level where they are now, but for sure they're gonna still have a little bit of increase in the residential real estate market, just because we can't afford a crash in this market, and the government has a lot of tools and power to break this crisis if it happens. So just remember, just put back the rate qualification like it was like 2 years ago, and right there you can increase the value of the property, increase the length of the amortization that you can have. That's gonna help also on the liquidity. So residential, I don't think is gonna have a crash in the market. It's still gonna go up, but not for sure, not as high as we had last few years. And I'm pretty sure we're gonna have, for investors, you have to look smartly to what's gonna happen in the multi-unit property, because like Manny said, few investors, they're gonna want to have some liquidity, and they're gonna unload their part.
Nice. Back to Emmanuel. Emmanuel, I know you must be talking to a lot of clients. Any clue, any input on April 1st rents?
So far, no. So far, no. I haven't had any clients or landlords that I speak of that they've had a flood of clients saying, "Oh, we can't pay, we lost." No, not so much. They're anticipating it, okay, but on the other hand, I mean, their lenders are telling them, "Listen, we'll help you, but April has to go through." Okay,
That's true.
so
Yeah.
April has to go through, and then we'll figure it out in April. I think that's the word right now. So they're expected to make their mortgage payment, landlords, and the tenants are expected to pay their rent, whether it's the 1st or the 6th when they get their check or whatever it is. They're still expected to pay. So far, it's we'll try to benefit from our from what the government and the banks are offering, and it should hold. It should hold if everybody does it in a fair manner.
Yeah, exactly, fair manner, as we said before. Just to reassure people also on my side, I mean, I've talked to my landlords, not my landlords, but my property manager. Sorry, same feeling here. Like a few tenants just wrote me a letter or called for saying that they're gonna have problem with the rents. It's sometimes it's already the tenants we had problem with. They're taking advantage of the situation, but I think the mass of people will still pay the rent on that, to reassure people on this. So I'm pretty sure it's going to be okay.
It's important to have communication with your tenants.
Yep.
You know? Like everybody who can try to speak with them. Look if they're, what's their situation. Are they okay? Do they have any concerns? Sometimes they're embarrassed to call you. They're embarrassed to say anything, and then you're caught with a hot potato, right? So
Yep.
Prevention is the best measure. I think you should call your tenants, have communication, make sure everything's okay, and if it's not, how you can help, and if maybe they don't know the resources, maybe they're not in tune with that, right? So depends which tenant you have. If you have that tenant who's lives in the plateau and is paying $3,000 a month, and you can still work from home, that's one. But the guy who's paying $600 a month in a 3.5, and he worked at La Belle Province and he just got caught, so that's it. You got to talk to your people. You got to talk to your people.
That's true. Any last word, guys? Starting maybe with David.
Last word is that we have to keep it up and be open, because for sure opportunity is going to come out, and we're always going to be here to help you if you have any kind of questions. So just rest for the next 2-3 weeks at home, but be open online. Now we have only good things going to happen after what is going on now is that we're going to learn to work differently. We're going to learn to see things in with a new eye, and I'm sure that opportunity is going to come up. So just stay focused and be out there. That's
Good.
my message.
Prepare your documents also, like I
That's
said.
for
maybe.
sure. You have time now. Just
Have time.
everything in order, all your paperwork. It's really the good timing. Nobody has excuses to say, "Oh, I can't find it." Yeah, you're there. You have your documents with you. Just put them in order like that. When we're gonna be when you're gonna have to use them, they're gonna be ready, and everything's gonna go smoothly.
Good. Very wise advice. Emmanuel, any last word?
Try not to kill your spouse or your children. Yeah, so everybody's home, so everybody's tense, right? So a lot of us who were mortgage brokers, we're gym teachers, right? We're doing all kinds of stuff to occupy your family and make sure everybody's healthy. But yeah, in the real estate side, like joke aside, like David said, be prepared, organize yourself, and try to stay lean. Take advantage of what you can, as long as it's fair. And opportunities are going to come back. And God willing, things don't get worse. And if they do, we'll see.
We'll adapt.
We'll adapt. Exactly.
All right. So on our side for the Real Estate Investors Club, we're going to receive Terry Shower on March 31st. So we're going to discuss, she's a coach at the Real Estate Investors Club. So she's a property manager. She's the author of the Mindful Landlord book also. So I'm pretty curious of what she's going to say about the tenants. On the French side, tomorrow, we're going to have a live with Jacques Lépine, the founder of the club. He's been in real estate since 1983. So I'm pretty sure he has some good tips about going through storms like these. So very interesting. And other also Facebook Live coming up next week. So that's going to be very exciting. So thank you very much, guys. Thank you, Emmanuel. Thank you, David, for your time. I'll let you go back to your children and have a good time in family. Ciao, guys.
Thank you.